Hey, what's going on? Today I'm going to discuss with you the importance of multiple time frame analysis. Now, multiple time frame analysis is really and extremely important to increasing your win rate and to increasing the chances of your strategy actually working. Let me show you exactly what I mean. Let's hop into the charts real quick. Okay, so we're here on Euro CHF. And first thing I'm going to ask you as a viewer is, where do you think price will go? With just looking at the information we have here, do you think price will go down? Now I want to ask if you think price will go up as well. Now if you think price is going to go up, I could see why. You're heading this nice little uptrend, price is moving higher. We do have a little bit of resistance up here, which might mean that price might go down. So this could be a little bit difficult to analyze, and this is why using multiple time frames is really important. So whatever your base time frame is, and in this example our base time frame is the 1 hour, always want to check a higher time frame than the one you're using. And I like to use a multiple of 4. So if you're using the 1 hour, I like to check the 4 hour. So by checking the 4 hour, we can then, in a sense, take a step back and kind of look at the bigger picture of what's going on. So if I actually go back and I look at the 4 hour, we get to see the bigger picture. And as we can see, we're in this downtrend. And since we are in a downtrend, we don't want to be trading buys if technically we're in a downtrend on the higher time frame. As you can see, price is now even pulled back to this kind of resistance, and we have yet to actually break a lower high. Technically, we are still in a downtrend, so it's probably better to look for sells, especially because we're in this nice downtrend. So 4 hour kind of determines the direction, kind of gives us some help in kind of seeing the bigger picture. The 1 hour is where we want to see the price action. This is where we want to see price maybe pull back to a certain position, like where it is right now. This is where we want to see the resistance of all these wicks. This is where we want to see how the MACD is playing out. This is where we want to look for some divergence. And as you can see, we have some divergence going on here because we have a high going to a low here. And then here we kind of have this, this high going to here, which is higher, but here we're going lower. So we're actually losing some momentum on the MACD. So I think it's about time to start looking for a sell. We know the higher time frame is telling us we should be looking for sells. So now what's even more interesting is using a third time frame. So we used 2 so far, and to add a third one in, we're going to actually start with our base time frame again, which is the hour, and then we're going to divide it by 4. We always like to use multiples of 4. If you're looking for a great broker to use, I highly recommend trading with Henko Trade. I personally use them. Great leverage, really great leverage, great spreads. If you're interested in signing up, the link will be down in the description below. So if we divide the hour by 4, we get to 15 minutes. And what's interesting is on the smaller time frames, you can look for a more optimized entry. You can really get pinpoint, and this is where you start to get those sniper entries, the good risk to reward ratios. So let's say we want to look for a sell. We're going to look for price to maybe break one of these lows here, or even this is a new low here. So we want to look for price to break it like this. So we have a break of that low, then we could take maybe a sell right here, put our stop loss up here, and just kind of bring it down. We can let that play out, see what happens. And what we could even do if we want to even add in a 4th time frame is we can divide that by, another 4, and we would get the 4-ish minute. So let's say we use the 4 minute, we could get an even more optimized entry by maybe entering off of some price action on this time frame. So here we could wait for maybe this low to get broken here. Broken, no, doesn't get broken yet. It's the new low here. We can see if that needs to get broken. And let's see, nice. Looks to me like price is starting to break it. So now we can get an even more optimized entry there. So before we had a 40 pip stop loss, right? So now we can have maybe a 20 pip stop loss, something even smaller, so we could get that better risk to reward ratio. This is the importance of using multiple time frames. So now, instead of only having like a 1 to 2, now we can probably have about a 1 to 5 risk to reward ratio because we're using that more optimized entry. And as you can see, price had a little bit less drawdown because we got very accurate with our entry because we dropped down to the smaller time frames. So now you have a 4 hour time frame telling you to take a sell. You have that hour time frame telling you to take a sell, and then you wait for that 15-minute time frame to take a sell, and then you enter on, let's say, the 4-minute sell. So now you have all these time frames that everything has actually added up to get you exactly to where you want. And you get those really optimized entries, right? Now we can see if this trade would play out. Maybe it will, maybe it won't. And look at that, almost hit our stop loss. But point is, this will increase your win rate because not only do you have one time frame that you think is going to go a specific way, but now we just had 4 time frames line up in total, 4 time frames. So it really helps to confirm your trades. Let's give a quick another example. You know, we could change it up. We can make the 15-minute be our base time frame. We'll switch it over to a different pair just to hopefully help you to understand. Maybe go to USD CAD here, and we'll just kind of randomly scroll back and just put a nice little rewind on that. So we don't know what's going to happen yet. We're just going to kind of look at the 15 minutes. So let's say the 15 minutes is our base time frame. We're going to use that as our base time frame. So, you know, right away we can see, you know, we might want to look for buy actually, because we have this kind of big gap right here that price most likely needs to fill. We will want to wait for kind of a lower high to get broken. It's not really true. Right here we had a lower high get broken. Okay, cool. So this would be technically a nice little break of that trend. So we want to jump to the higher time frame. So if our base time is 15 minute, we times it by 4, we get the hour. We look at the hour. You know, as we can see now, we can see we're in a sell. So it's kind of a little bit less likely. So now we can see how this would play out. Maybe this might be a losing trade. Maybe it might be winning. But here's something we have to factor in. We have to factor in the possibility that price could come up to kind of fill this impulsive move. So, you know, jumping into the 1 hour, we can take a step back and actually see the bigger picture. And we see the bigger picture, we're in a downtrend. So it's probably not a good idea to look for a buy. However, we still will kind of look to see what will happen, what will play out. But by adding in this confirmation, it can be helpful to not get you trapped into a trade. Anyways, still considering that we wouldn't probably have taken this trade, we're still going to look on the lower time frame here. See if we can get a more optimized entry for a buy. And right, so we had price kind of break this lower high here. So, you know, let's go even one time frame deeper to the 1 minute. Looks like we can't use the 1 minute. Play that far back on the 1 minute. Gotta go all the way back. Okay, so we're back. So we had that break, you know, price is moving up. Now, let's say you were to go for a buy, right? You wanted price to come up here. Now let's say we let this play out, you know, factoring in the fact that if we look at the higher time frames, obviously we can see we're still in a downtrend, so we shouldn't be looking for a buy here. As we go to the 15 minute, we let this play out. Let's see, and straight into our stop loss. See, this is why I say it's good to look at the higher time frames, because as we can see, if we could have saw the higher time frames in a downtrend, we wouldn't have taken this trade, and we would have, you know, skipped out on this loss, which increases our win rate overall. So this is something really important that I thought I'd share, something you should add to your trading. Hopefully you enjoyed.